to meet and greet a bunch of different millionaires, billionaires, high-end people that looks are very important to them. Other than that, I treat it as an investment because these things hold value. So I was excited to talk about this.
For those of you that aren't watching this on YouTube, Shane's glowing right now. I don't know if it's the light at the time of day that he's talking about it. All right, everybody, welcome to another episode of the 1% Podcast. I'm your host, Vin, and
I'm Shane.
And today, Shane is all blinged out in his best investments that he wears. And that's actually going to be what we're going to be talking about today. I don't think we really have a fun topic prepared, but we do have a conversation nonetheless that is not financial advice. We are not financial advisors, and we don't suggest that you do anything we're telling you that we've done. We are just two buddies chatting here for you to listen in on as we talk about what we are potentially thinking of doing with our monies that we've made over the past, year or whatever it is. So, Shane, show people your fancy investments.
Show people my investments. Well, I think what Vin's referring to is, yes, today I am wearing my gold and blue Submariner Rolex. These are definitely an investment. This is probably the sixth time that I've actually worn this since I've owned it for about a year and a half now. And that's particularly the reason why I don't like to wear it unless I'm going to, which we've talked about in our previous podcast, if I'm going to like a nice dinner where I'm going to meet and greet a bunch of different millionaires, billionaires, high-end people that looks are very important to them. Other than that, I treat it as an investment because these things hold value. So I wanted to talk about that. I also wanted to talk about some other investments that I'm currently into. The oldest investment that I am actually into, dating back as far as 2007, which is my first one that I've gotten.
Wow.
And I still continue this day. Actually, I just cashed out for about a third of this and put it into another investment. So I'll talk about that as well. But it is precious metals. So this right now is actually the Year of the Dragon. They only made 100 of these. It's 8 ounces of pure 24 karat gold. I saw it. Luck of the Dragon is supposed to bring you luck, so it sits on my desk in this nice case in here. But that being said, precious metals is a very huge investment. It's treated as a savings account. It's never going to go to zero, which it's a very safe asset. It's physical, it's tangible, it's something that you can actually hold. And that's the big thing there is the incremental value goes up, goes down, but not by a lot. It's not like a stock. So I would say most of my quote unquote savings account, my money goes into precious metals. And I've invested in that for a long time because my grandfather showed me the way. Since I've bought gold, I remember buying gold when it was about $1,000 an ounce. Right now it's $2,400 an ounce. Same thing with silver. I remember silver being at $7 an ounce, and right now it's $31. So it's definitely gone up a lot. I've definitely bought and sold throughout periodics of times. I've bought in silver at $15, $12, $20, $22. That's just how it goes. I think precious metals is a good foundational wealth. It's, like I said, it's used for multi-purpose and multifaceted things, for catalytic converters for cars. It's used for jewelry, used to back the American dollar back in the 70s. And so I just don't think it's ever going to go to zero. And that's the main reason why I invest into it. The next thing is that you'll see behind me are cards. And sports memorabilia. This is something that's never really going to go out of style. This is really up to the eye of the beholder, is really what people will pay for it for what it's worth. However, back in COVID, when it first started and people were getting those checks, cards boomed. Pokemon, Yu-Gi-Oh, Magic the Gathering, sports, they all just completely flourished. And what I mean by that is, cards now compared to even 5 years ago are 5, 6, 7 times more expensive, if not way more expensive than what they were. And to be honest, they're not going anywhere. And the reason why is there's too many people now invested into the market that it's just not going to go. There's more eyes and attention on it, and it's just getting more and more popular as they bring their kids in. And of course, when it comes to sports, it's been around for, 100 years if it's been football, if not other sports. Let's keep going down the line. I believe in diverse portfolios. This is going to be me talking for a little bit here. Vin, do you have any questions so far? I know, I'm sorry.
Oh no, we're good. Go. Can do your thing. Do your thing, Shane. You're shining.
So the next thing is, like I said, this is really of a diverse portfolio. Is rental properties, rental properties, Airbnbs, VRBOs. I personally don't have any Airbnbs or VRBOs. I don't know how those operate because both my rental properties are where they're at. They are not in places that allowed Airbnbs, which I didn't know was a thing. Which Summerlin, Nevada, is where one of my rental properties is at. Doesn't allow it. But anyways, the big thing here is not cash flow for rental properties. It's so if you're looking to get cash flow positive, that's not the route to go, especially with interest rates right now. The name of the game is long-term value. Do you believe in the city that you're currently investing in? Do you think that it's going to go up in value in the next 3, 4, 5, 10, 15 years? If the answer is yes, then I recommend, buying real estate in there and offsetting some of that mortgage, 100% of your mortgage, or profiting a couple $100 here and there. But the name of the game is always long-term value and instrumental growth. I'd say the least amount of my portfolio is stocks and crypto. Stocks, I'm a little leery on. I've lost a lot of money in stocks, and same with crypto as well. I do think that crypto is the future. I think that we are going to have a world-renowned currency, meaning that everybody uses it. And I think it's going to be digital. I think the true benefits is that it can't be, taxed. It can't be hacked. It goes to physical, actual wallets. I know the government's trying to do their best with what they have, but at this point in time, even with the government's new regulated coins that are coming out, I think that Bitcoin and other various coins have a really strong future here. So I'm currently invested into crypto and other stock markets that I currently believe that they're going to be prosperous in. There's 7 minutes of me talking about a well-rounded portfolio that I believe in, that I do on a regular day-to-day basis, on top of having my businesses. So I was excited to talk about this.
Can't you see him? I mean, for those of you that aren't watching this on YouTube, Shane's glowing right now. I don't know if it's the light at the time of day that he's talking about it. I don't know if he's switched out his lighting, but there's almost an angelic glow, like a halo is practically forming around him. Like if you've ever seen that photo of Jesus in some mosaic, glass at a church, he has that big golden halo that looks like a big saucer behind him. It's kind of how Shane looks right now. He's
The
absolutely
funny thing
glowing.
is, I know exactly what you're talking about, and I look nothing like that.
Shining, gentlemen and
Nothing like
ladies.
that.
Ladies and gentlemen, he's shining. Man's been flossed and glossed before this episode. So I don't really look at things the way Shane does. Actually, Shane and I we have similar ideas, but we have different. I don't personally care for metals because I don't want to just hold them there. I know that they can gain interest or not. I've also traded on the commodities market a little bit. I did some interesting like trading on the gold slash US dollar, and I was having some fun with that. I don't really like that though, because it's funny because when one does well, the other doesn't. So it's a little trick that I learned when I was really heavily into this, and is if gold's doing well, the dollar's doing horrible. If the dollar does well, gold does horrible. So you're always going to have those ebbs and flows in the market. I think identifying where the market's at is super important if you intend to do any type of active trading, because there's different types of trading. I really like doing more of a passive investment strategy now because I too have lost a good bit of money in my active tradings. Now, here's the thing. If anyone who tells you that says it's risky, they just don't know what they're doing. I've lost money because I didn't know what I was doing. Yet there are people out there that know how to read the charts and they do phenomenal and they crush it and they teach you how to do it. So if you do your research, you're probably going to be fine. And of course, you will lose money every now and then because the chart will look like it's going to do one thing and it goes sideways. But most of those people that know what they're doing do win more than they lose. But the average trader does lose more than they win, but that's because they do not have in-depth knowledge, I've come to find. I also did not have the time to actually dedicate to sitting there and truly properly learning this. So I'm not going to say I couldn't learn it. I'm just putting it on the back burner for now. It's something I will pick up later. Um, I like investing in stocks, but I like investing in dividend yielding stocks. I want my money to not only grow, but continue to make me money that I can reinvest and make more money on. My favorite stock, and again, this is not any type of financial advice. Don't listen to anything I'm saying and do anything with it. Just hear my thoughts. I have this one stock that I've been investing in for years and I absolutely love it. The ticker is AGNC. It's an ETF, and it actually pays you a monthly dividend, and it pays you roughly between per year. It's like a 12 to 15% yield per year, roughly. And I really love it because it's backed by securities and it's based on mortgages that are backed by securities. And so it's a very, very safe and secure stock. I don't buy it for growth, I buy it for dividend. So I really like having investments like that because for me, my money just making money that I don't have to actively monitor makes a lot more sense to me. I also really enjoy gambling in the sense of businesses. So I've invested in a bunch of startups. I've done equity deals in startups where they will take a portion of my coaching fee and put it in as equity as opposed to paying me a full coaching fee, which I've actually been a big fan of doing that. I just like business in general. I bought a laundromat and to be transparent, I would love to actually just buy another because now that we've figured out all the issues that come with it, I think buying businesses is one of the best investments you can make, especially if you're buying recession-proof businesses. Like I don't think real estate is always the way to go. I think real estate's good. I don't have a problem with real estate. I like investing in the real estate dividend stocks, but I don't know how I personally feel about owning my own real estate because I'd rather just go buy a business. Now, you might argue you could buy the real estate that the business is on. That's a great investment, in my opinion, because now it's a double whammy. Because even if you don't want the business anymore, you could at least rent it to somebody that's most likely going to buy it or get from you a 10-year lease. Because if you think about it, most businesses aren't going to want to come in, buy a business, own the business, and operate it for a year or two. They're going to want to get the most out of that money. They're going to want a 10, 15, 20-year lease if that's even possible to do with you. So having commercial real estate makes a lot of sense to me. Having businesses makes a lot of sense to me. And then one of the things that I do quite often actually is I have a good friend, he's also a client of mine, and he runs a real estate firm. And so him and I every few months will do real estate flips. And I mean, again, he handles that. I just give him hard money quick and it'll be out for me about 90 days and I'll make about 12%. And then I'll do that again for another 90 days. So I mean, that's actually the best one. I think that's the best investment I have because, I mean, if you think about it, I just make 12% multiple times per year or 10%, whatever it is. It varies, right? 10%, 12%, things like that. But you do that a few times, you're getting a 30, 40% yield on those investments. So that's actually probably the best one that I get to do. And I'm a big fan of figuring it out, like not being super diversive like Shane, but more so what's the areas I like because I understand them and then I want to go in. I hate crypto for any of those people that are listening. I really do. I've interacted with a lot of the crypto world and it really just seems like it's a lot of people that believe in the same thing just yesing them each other to death, and all of the conversations are had by people that are in crypto with other people that are in crypto. I don't really see conversations between people that aren't in crypto and people that are in crypto. It's just like the rooms don't exist together, I feel like. And so every time I go into these crypto conversations and I try to learn about it, it's just one person's like, yo, crypto's the future. It's like, bro, I know I've been saying this since 2009. Like, bro, no, you don't understand. It's been growing since. Dude, I know. Bitcoin to the moon. Bro, Solana, super trash coin, but also to the moon. Dude, I know. Let's get these meme coins and blow it up to the moon together. And I'm just like, it's just people that like the same crap. I don't hear anybody from the outside world actually talking about crypto. So I'm going to continue to hold off on that. I actually liquidated my entire crypto account today. I did buy in a while ago to some Solana for some projects and things like that, but I actually just liquidated my crypto account to put it into some more real estate flips. So that's what I'm doing. That's my fun stuff.
I would say there's one other thing that I forgot to mention. Is a safe bet. I think that's the big thing with me is I like safe investments. Crypto is probably the riskiest thing about me, but I do believe in the future, bro.
To the
That's
moon,
for
bro. The crap
very.
coins, the Dodge, and the doggies.
It's funny that you have the surfer hippie mentality because those are the least likely people to invest in crypto. But regardless, I got the symbolism is insurance policies. So there is actually great ways to make decent returns, like Vin's talking about dividends, anywhere from 8 to 12 to 15 to 20, based on how risky, I guess you'd want to call it, for like essentially like a 401k account when they invest your money into other different things. But there's life insurance policies out there that actually are quite amazing. And I'm not an insurance rep, and I'm not going to talk about it, but
Still not
I
financial
definitely
advice.
yes. But if you are looking in for something that one kind of covers both bases as far as a death benefit, there's a lot of different things out there, that can actually one treat things as a savings account. If you do pass away, you have peace of mind that your family's going to be taken care of. So there's a lot of other things out there. It's just, as Vince said, what are you passionate about? What do you like to do? Do you want to be a little bit risky and make a little bit more money, or lose it a little bit more money? Do you want to be safe about it? I think that's the best part. The number one thing that I can say that I tell everybody is don't do nothing. This is a very old mentality of saving your money. Saving your money is not a thing. Do
Stupid.
not save. And why do I say this? And why I've been preaching this for years. And ever since I actually read Rich Dad Poor Dad, I give Robert Kiyosaki a shout out here. And you need to have your money working for you. It doesn't matter what it is. It doesn't matter if it's 1% return, because your money in your savings account and your checking account is doing what? It's doing nothing. Well, what's happening when inflation's taking place? What happens when, the dollar is now only worth 30 cents, 27 cents? It's pointless. If you have $100, if you have $10,000, whatever you're doing, do the research, figure out how you can make your money, whatever that number is, work for you and give you an investment or give you a return. That's what you need to do. I promise you, I am living proof that works since 2007.
I agree. And it's funny too, because a lot of people don't realize, I think there's mentalities out there where people are saying, well, it's not really going to be a make or break moment, so why even bother? Like, for instance, for the laundromat, what we're doing, I had this idea the other day, and I was like, wow, this is dumb that we didn't do this sooner, is we have a safety net built up in our laundromat. So if things really hit the fan, we always have about, I think the number that we keep is 6 months of runway. So we could sustain for 6 months if we have zero income. And you should always do that in every business, by the way. So that is a piece of advice. I don't know about financial advice, but it's definitely a piece of advice. Have a safety net in every business that you have, or even your lifestyle. Like, if you lose your job today, even if you're a 9 to 5 employee and you lose your job today, make sure you could sustain your life, your family's life, whoever, for X amount of months, whatever your risk tolerance is. There's some people that want an 18-month runway. There's some people want 12-month or 3-month. It's up to you.
But not in a savings account. That's very, very crucial that we're not saying just have that 6 months, 3 months, 18 months of money in a savings account. That's where Vin's going to go to next, which I'm excited that I heard that news from Vin too.
Yeah. So I was thinking, like, wow, this is silly, because I overheard this from a client that was talking to me, and he was venting, because he was advising this company. He's like, you have all this money in a freaking bank account. Why? He's like, and they're like, oh, we need liquidity. Of course you do. But there's other things that you could put this in to still make money, like high yield savings accounts. And I was like, wow, that's so dumb of me, because I have a personal high yield saving account for my money in an emergency situation, but I didn't think to do it for my business, with all the money that we keep in the safety net. And so now today I spent a few hours and I came up with 20 different things that could pay between 4 to 5.5% yields between CDs, high yield savings account, high yield checking accounts, and even like treasury bonds, some different funds that are super low growth, low risk, things like that. So there's a lot of different ways that you could keep your money growing, even in a small capacity. Because if you think about it, the average bank account right now is giving you like a 0.04%, if even that much. Some of them are like 0.004%. Like you're going to get a penny on $10,000. Where if you have $10,000 in an account, you go to 4%, 5%, that's $400 to $500. And now, mind you, that's for the year. So a lot of people are like, well, who cares? That's not a lot of money, $400 to $500 for the year. Okay, sure, you're not incorrect. Maybe that $400 to $500 is not a lot, but it sure is more than a penny. And you're going to either get the penny or you're going to get the $400 to $500. So which would you rather have? And then next year, let's just say you keep that $400 to $500. Now you're going to get more and more. And then we call that compounding interest. Sometimes what makes an investment great isn't even the fact that it'll pay you in that moment. It's the fact that what it's able to pay you and continuously pay you compounds to make it like a snowball effect. Like compounding interest is essentially that. It is a snowball effect. It is taking this little thing and rolling it as it continues to pour into itself and reinvesting whatever that money is, that dividend, and then boom, good payout. So we did some great calculations. We're going to switch. I've been doing a lot of the research. We're going to switch over to a high yield savings account. And here's another thing too. Based on how quickly you need money, some of these high yield savings accounts, I would not recommend throwing every dollar into, because most of these high yield savings accounts nowadays are online only banks. And so if you need that money like today, you're not actually going to be able to access all of it, because you're going to need to transfer from one account to another. That could take a day or 2 days or whatever. And maybe not. Maybe it'll be interesting if you pay a transfer fee. I haven't looked that deep into it, but I mean, even that, we're going to leave 1/3 of our safety net in a traditional bank account and put 2/3 into the high yield, just so that we always have that operating expense that we can know is in there in case we dip into it and we're not worried about finances. So even that, always still leave a small percent if you have to, or if you should, if it makes you feel comfortable, in an account that you could quickly access, and then put the rest of it to work for you, even if it's a small 4% to 5%, because that 4% to 5% is going to help you beat out inflation. Because to Shane's point, you are literally losing money if you just hold cash or leave it in a regular savings account. Oh, here's the other freaking kicker. The bank's playing with your money. You're going to leave $10,000 in the bank. The bank is using that $10,000 to make 20, 30, 40%, and then they're going to pay you 0.004%. That's wild to me. Like, why would you be so dumb as to let them just have fun with your money while you gain nothing from it? So I'm scolding you, listeners.
I mean, I think a lot of I would presume, or I would assume, that a lot of the listeners have seen what's going on in the news, especially last couple of years, about all these banks in Silicon Valley going bankrupt, and people trying to withdraw all their money from they just put a freeze on it.
Yep.
But yeah, this is definitely no shock. When you give any amount of money to the bank, they're going to take that money and they're going to use it for investments. It's the same thing for insurance policies. It's the same thing for businesses, whether they invest it into themselves or they invest to the market. That's what they do, right? They need to make sure that they're going to grow. And sometimes it's a safe bet. Sometimes it's a risky bet. And they'll put that into the fine print. But it's moral of the story is look into things that are going to help your money get you money. Have your money work for you instead of the other way around. There's just no point. Cash is obsolete. Savings is obsolete. That's just not needed anymore. And once again, I'm not talking about having a safety net for your family or for your business. That's not what I'm getting at. I'm just saying don't put it into an account. Don't put it into a savings account without it growing. Because $10,000, $400 to $500, that's a lot of money. That could pay off a bill. That could pay off 2 bills, 3 bills, whatever it may be, compared to having to spend another $400 or $500 out of there. And that's just using it for $10,000. How about for $50,000? How about for $100,000? How about for $500,000? Right? That 4% to 5% is starting to look bigger and bigger. Regardless, it shouldn't downplay anything. Whether you're getting $10, it's better than nothing.
Yeah. Right. Well, and that kind of comes back to that whole point of compounding interest and building off of that, because, people don't realize the investment game is a long is a long one, because now, unless you're going to invest in a business that's about to do an exit, like a private equity deal, and you're going to gain like, I don't know, 100% or 150% return, which usually you need to have a lot of money to get opportunities like that. Your main strategy should just be doing something along the lines of like, I don't know, invest in something that could be somewhat safe. Like, I'm a big fan of the strategy of just invest in the S&P 500. The average return is 10% per year, average, right? So, I mean, you look at that, and to Shane's point, it multiplies. So if you put 10,000 in, you get 1,000. If you have 100, you get 10,000. If you have 1,000,000, you get 100,000. I mean, you could live at that point, if you're pretty savvy with your finances, you can live off 100,000 a year, and then you just keep letting that. Now you're not even working anymore. There's that point where it's like, can you get your passive income to overtake your active income? Because then you could just live a lifestyle that you want. And so I think it's very, very important. Now, diversification, I think, in my opinion, I don't dislike Shane's strategy, but I think Shane is also at a more advanced level. If you're not somebody who has a great income and a lot of opportunity for bigger and better investments, my thing would be invest in smaller dividend stocks and just start gaining some money, because you might not have whatever it costs to invest in a gold bar and keep it sitting in your house. You might need that. So I think it's really important to just look at these different strategies and understand where you're at and what might be good for you. Again, none of this is financial advice, just two guys talking about what we're doing with our money and hopefully inspiring you to do something too. So we're going to cut it here, folks. As always, thank you so much for joining us. Like, share, subscribe, follow, tell a friend, tell two friends, leave us a comment, tell us what you liked, what you didn't like, if it was helpful, and do not sue us because we didn't give you any advice. So, as always, I'm your host, Vin.
Real quick, tell us what you're investing in. I'm generally curious, right? No financial advice. Tell us what you're investing in.
I told you.
Right? Maybe.
I said what I was investing in.
Yeah. No, not you.
Oh.
Yeah. The
listeners.
Yeah.
Oh, yeah, listeners. What are you invested in? Give us no advice.
All right. And I'm Shane. Bye, guys.